Okay, so I'm gonna show you a setup that is going to help you understand the market better and also allow you to catch amazing trades. Okay, so grab a notebook and pay attention because I'm gonna show you A+ setup for trading that I use every single day when I trade, even on the weekends when I'm trading crypto. So pay attention because this is what we are looking for. Okay, we are gonna go nice and easy through the whole setup. And the first thing what we need is high time frame liquidity sweep. Okay, so what does high time frame liquidity sweep actually mean? Let's go to our graph. Let's remove everything and start with daily chart. So high time frame liquidity sweep means that the price goes either through daily high and low. For example, here we have daily low, then we have a high. Okay, wait, let me change the color. Okay, so that's the first thing. First thing that you need to do is identify where the liquidity is. Okay, so it's above daily high and low. Okay, then we go to 4-hour chart and we mark all the necessary highs and lows and swing highs and lows. Okay, so what do we have here? Here we have a low, move down and a move up. It's a low. Okay, then here we have another low. Then what do we have over here? Another high. Then what do we have here? Another high as well. Okay, so we marked all highs and lows. Okay, then we go to 1 minute, 1 hour, and we do the same thing. So what do we have here? We have a low. Then do we have anything else in the middle? Nah, not really. Okay, now that's on 1 hour. Then what do we do? Then we go on, let's say, 15-minute chart. Okay, and we identify sessions, highs and lows. Okay, so what do we do in that case? In that case, we take, let me mark you. So here we have Tokyo session, then at 3 we have London session, then at 8 o'clock we have pre-market, and at 9:30 we have New York market open. Okay, so what do we do again? Here we take a look at the highest points. So in our case we have here Tokyo session high, then we seem to have over here Tokyo session low. Okay, then we have London session low, then we have London session high, and so on and so on. Okay, so we mark all the necessary highs and lows within the sessions. Okay, my indicator obviously does that for me automatically, so I'm gonna use it as my own indicator. Okay, so then we go to 1 minute and we wait for, what the fuck is this? And we wait for a liquidity sweep. Okay, so liquidity sweep means that the price will go through highs and lows of high time frame. Okay, we marked our liquidity. So what is now high time frame liquidity sweep is that the price will go through liquidity, okay, and then sweep it and then continue in the opposite direction. Okay, and this is exactly what happened over here. You see the price went lower and lower and lower. So over here we have a liquidity sweep, you see. So we already have a liquidity sweep. Now what are we waiting for? We are waiting for break of structure. So we know that break of structure tells us that the market has the potential to shift trend from, in our case, bearish to the bullish one. Okay, so what is break of structure? Break of structure is when we close above the high that caused the liquidity sweep. Okay, so here we have a liquidity sweep. So this is now the high. Okay, and then here we have another liquidity sweep. So this is now the high. Okay, and then you can see that the price then continues higher and higher and higher and higher. And over here, what does it do? It closed above that high. You see the blue line? This is break of structure, okay? Because the price you can see it closed with this candle, it body closed above that high. So we have break of structure, okay? Then additionally, what are we waiting for? If we have inverse fair value gap, if it is available, then we also consider that as an additional confirmation. And you can see that over here, we have a bearish fair value gap, which eventually got inversed into a bullish inversed fair value gap, okay? So we also have that one, okay? Because that means that here the buying power was so good that we basically changed the fair value gap from bearish to the bullish one, okay? Because in fair value gaps, there are usually a lot of different selling orders in our case. So if the buyers managed to flip those orders into bullish ones, then here we have a lot of buying power, okay? So we have inverse fair value gap. Then what are we waiting for next? We are waiting for the price to touch order block, okay? So what is an order block? I take those candles, okay? So I take this white candle until this another white candle that broke structure, okay? So I take all of those candles that were within the break of structure, and I take the one that has the lowest wick, okay? In our case, this white candle created the lowest wick over here, so I drag it, and this becomes our order block, okay? And what will the price do? The price will usually go into the order block, touch it, and then continue higher, okay? So we have an order block, and then we also have an equilibrium, which is basically the middle point between the most recent low to the most recent high. So what do I do in that case? This is the most recent low. I drag the equilibrium from the newly created high, which is over here, okay? And you can see that 0.5 represents the equilibrium. You can see that the price went into the equilibrium, touched order block as well, and then continued higher and higher and higher, okay? So in that case, we also did the equilibrium, okay? And now you are asking yourself, where should I put my order? Well, you should put your order like this. The price went lower, okay? And you could put your order, for example, here at the beginning of order block, for example, put your stop loss comfortably below that liquidity sweep. Or what you could do is to put then at the beginning of the equilibrium, for example, you could put your order, or in the middle point between the beginning of order block and the beginning of equilibrium, okay? And now you are saying that, yeah, if this stop loss is way too tight, then what can you do? You can copy the order block as well, put it below, and use that second order block as a comfortable stop loss, okay? So this is basically how you enter with a setup checklist, okay? And this strategy that I showed you has never failed me yet. I mean, yeah, of course you will have losses, which nobody talks about, but yeah, this is the strategy that I'm using on a daily basis, okay? Now the same thing is also applied at the New York market open, for example, because take a look what we have. Let's delete this. What do we have over here? We have liquidity sweep. You see, because we swept pre-market session low, so we have liquidity sweep. Where do we have break of structure? We have break of structure then over here with this white candle, okay? So we have break of structure. Do we have inverse fair value gap? Yes, we do. We have it like here. Oops, sorry. Yes, we do. Do we have order block? Does the price touch order block? No, it doesn't, unfortunately. Because here the price went so high, you know, it went higher so fast that you wouldn't have touched order block. But if you would pay attention, you could actually touch your order block, for example, here. you see, with this little white candle, you see here. So you could technically say, okay, we touched it, and then do we also touched 0.5 on equilibrium? Let's take a look. Yes, we go comfortably below 0.5. You see, we touch the order block and then continue higher, okay, for a little thing, okay? So what could you do again? You could put your order, for example, here in that order block. You would get filled, okay? You put your stop loss below 0.5 on equilibrium, and you would have nice 2.6 trade, for example, okay? Or even 2.5 maybe, would you get it? Yes, you would, you know? Or if you want to have better stop loss, then again, we can make the double, you know, of this order block. So then that way you would have it like this. In this case, you would target 1.5 maybe, you would get it, and so on and so on, you see? So this is, we did 2 trades on yesterday's price action because today is Saturday, and both of them were a winning trade, okay? So at this point, I want to invite you to join into my Discord server. It's completely for free. We have trading, you know, we have trading content, basically daily bias you found here, then trading breakdowns. This is the same trade that I did, that I showed you right now, but I quoted it that way, okay? So then you can post your own trades if you want over here. But we also have self-improvement, because our mission is to become better traders and stronger men with trading and self-improvement. So join, bro, join our movement, do the hard work, and see you on top of the world.